समर्थन करते हुए अपील करता हूं कि इसको पास किया जाए।
माननीय श्रीमती निर्मला सीतारमन जी to reply the discussion.
Thank you very much, Deputy Chairman, sir. I understand 24 speakers have contributed to this debate. It's a major step in reforming the insurance sector. There are 3 acts which are being amended so that there is an alignment and also the policyholders' interests and safeguards are kept top of our mind. So before I go into the specific step that we are taking, just want to recall that the Insurance Act of 1938 had seen several amendments before today. 12 times before 2015, I could say before 2014, the Act has been amended, but inclusive of the last amendment, if we look at the major milestones which are important for us to recall, I find in 1939 itself, early amendments were brought in just so that it is consistent. And several, year after year, 39, 40, 41, 46, 48, amendments had happened. And in the year 1950, reduction of agents' commission as a major milestone was brought through.
Honorable Minister, just for a second. Honorable members, the discussion on the Sabka Sabki Raksha Amendment of Insurance Laws Bill 2025 is underway. If the House agrees, we may sit beyond 6 p.m. up to the disposal of the bill. Do I have the leave of the House to extend the sitting beyond 6 p.m.? Okay. Honorable Minister.
So, allowing FDI into insurance sector, sir, was even envisaged in 1999 when, for the first time, entry of private players in the insurance sector was allowed with FDI opened with a limit of 26%. Post that in 2015, we had the maximum foreign investment cap was raised to 49% from 26. So 1999 it went to 26, 2015 it went to 49, and in 2021 it touched 74%. Now we are coming up with FDI 100%. So similarly, the LIC Act gave several amendments again 8 times before 2014. The LIC Act has been amended. In 1981, explicit powers were given to the central government to make rules regarding service conditions of all classes of LIC employees and agents. I would say that was one, and later in 2012, paid up equity capital of LIC was determined at 100 crores. But subsequently, LIC has gone for IPO, which is something which all of us know of. And since the regulator-related IRDA Act, sir, establishment happened in 1999, but with 2015 there was an amendment to align it with the Insurance Act, and also subsequently one more in 2019. So these 3 acts which we are trying to amend today have already seen amendments at different time periods. So since coming to power in 2014, our government has actually made significant changes in the insurance sector. Because if the country's development has to be achieved, we need greater insurance cover for our people, for our businesses, and also for our health, and also for majorly for agriculture and so on. Keeping that in mind, in 2017, our government brought in the insurance ombudsman rules, and that was to provide a fast and cost-effective channel for resolving grievances of policyholders. Today, IRDAI has established an extensive framework for protection of policyholders. It mandates insurers to provide crucial information to policyholders at the time of policy issuance and setting stricter timelines for claim settlement. So the regulator is actually moving after consultation to giving greater protection to the policyholders. Sir, the government has also established the National Health Exchange to facilitate exchange of claims, health claim, and information thereof between the hospitals and the insurance companies. This way, the policyholder doesn't have to run from one pillar to another post, but if the health claim information is shared between the hospital and the insurance company, it resolves issues faster and in a seamless manner. So the settlement of claims has become a bit more simpler, although there's a lot more that one can do. Our government is also deeply committed, sir, to expansion of affordable insurance in rural areas for common man. And that is why you find several flagship schemes, particularly insurance schemes, which have been launched since 2014. Jeevan Jyoti Yojana, Suraksha Bima Yojana, Jan Arogya Yojana, and Krishi Bima Yojana are all in the interest of the common man who requires affordable premium to be covered under these schemes. So together, the Jan Suraksha schemes, as I would like to call it, has provided a safety net with total enrollments. The Jeevan Jyoti Bima Yojana, Suraksha Bima Yojana, Jan Arogya Yojana, Krishi Bima Yojana together have enrollments over 81 crore people, all of whom need that cover. Okay, they have all been enrolled. But has there been any settlement-related data which proves that the scheme is actually delivering where it matters? So these 81 crore enrollment has seen settled claims to the beneficiaries to the tune of 23,440 crores. So these poor people who have been given the cover with minimum premium taken from them, accident or life, have seen settlement of claims to the extent of 23,440 crores. Also, sir, the IRDAI or the regulator has also mandated launch of standard insurance products, no frills, basic product that is, to ensure affordability to all sections of the society. These are actions already in place. And also through the regulation, the regulator has actually mandated rural and social sector obligations. And this obligation is across the board for all insurers, and they will have to therefore cover specified percentage of people belonging to the rural areas and underprivileged sections also. So these obligations are binding on all insurers and are being rigorously monitored by the regulator. Also, a very interesting initiative which the Honorable Prime Minister Modi had taken was to bring in more women as insurance policy agents. That is, they are called Bima Sakhi. And it was launched by the Prime Minister in December 2024. Under this initiative, sir, I'm so happy to say this, close to 2.20 lakh women have been trained and deployed as insurance agents, earning a meaningful livelihood for themselves. They are increasingly contributing insurance coverage by taking insurance products to every household, especially reaching women in the households who are often left out of protection net of various insurance schemes. Another priority of the government, sir, has been to strengthen the public sector insurance companies so that they can meet the insurance needs of citizens effectively, listing of LIC GSE Re, that is reinsurance, and New India Assurance has been a step in this direction. So, capital to the tune of 17,450 crores has been infused in 3 other public sector general insurance companies to strengthen their capital base. As a result of these measures taken, LIC, GIC Reinsurance and Agricultural Insurance Company of India Limited, the AICIL, reported their highest ever profits last year, while other companies have also now started making a turnaround. They're becoming profitable step by step. So now to attract global capital, sir, the FDI limit, as I said, was raised from 26 to 49, 49 to 74. Foreign reinsurers were permitted to set up branches in India and thereby increasing the local reinsurance money which is available. FDI limit for insurance intermediaries was raised to 100% in 2019, which was one major step taken to enable them to provide better advisory services to citizens also. I'll just give a snapshot, sir, of the growth of the insurance sector since 2014, and gradually we see also the opening up of the sector. Sir, in 2014-15, number of insurers were 53, whereas 24-25, we have 74 insurers. Insurance penetration was 3.3%. It is now close to 3.8%. Insurance density, which is defined as average insurance premium paid per person in a year, even that has increased. US dollars 55 when it was in 2014, US dollars 97 now in 24-25. Total insurance premium in lakh crore rupees, 4.15 lakh crores in 2014-15. Now it is 11.93 lakh crores. So actually, the insurance premium amounts showing or reflecting the fact that more people are getting covered is seen in these numbers. Assets under management, again in lakh crore rupees, it was 24.20 in 2014-15. Now it is 74.43. 3 times it has increased, asset under management. So, opening up the market, opening up the insurance sector has actually helped in greater penetration. There's scope for more. The GST Council, which met in September, sir, 56th Council, had over the year looked at the demands which were coming for health insurance and the premium having to bear the GST. So there is now, after this 56th GST Council meeting, there is now 0 rate for GST, which has been brought down from 18%. So earlier it was 18%, now it is 0 on all individual life insurance policies and individual health insurance policies to make them more affordable to the common man. Then this nil GST on individual health and life insurance is a very big tax relief that directly reduces the costs of premiums of policy holders and encouraging more people to join in the insurance schemes. So there was a major initiative taken, Aapki Poonji Aapka Adhikar, your money, your right, which saw that many unclaimed deposits or shareholders' money or insurance policy money which was lying unclaimed, we took it upon ourselves to run a campaign across every district of the country. The last which I can say, 500 districts have been covered. We held camps since October 15th, the camps are being held, and many public representatives and district administrators have participated in this. The camps have been very, very useful for the people who are legitimate claimants who have not till now benefited, who didn't know how to go about claiming it, if they knew that there was a money which they can claim, and so on. The insurance regulator also, through the Bima Bharosa, has empowered citizens to trace their unclaimed policies or insurance claims which are lying without them claiming it. So even within the first 2 months, sir, of this campaign, we were able to distribute 2,000 crores to those people who till then didn't know where to go and claim. Public rightful ownership has been recognized and the monies have been given to them. This campaign will continue. I request each one of the honorable members to please talk to people in your respective constituencies and in the states to make people aware that probably they also have something to claim and which are lying unclaimed. We will be more than happy to work to trace it all back and put it together to give the money back to the people. This is something on which the Prime Minister has been closely monitoring, saying, are you giving the money back to those legitimate claims? It is the right of those people to get it, but it has to reach them. So I would think it is important for us to, all of us, help people who need to get this money. So this present bill is brought with an intention to give further boost to the insurance sector, as I said at the beginning. One important thing which I think is critical for all of us to recognize is the provision to disgorge falsely claimed profits is now being given to the regulator, and the monies will also have to be given back to the people to whom it rightly belongs. Also, every time a penalty is levied on a company, those monies will go into the policyholders' education and protection fund so that greater awareness can be built. By this, the interest of the policyholders is also being kept in mind. The regulatory oversight of the insurance companies' affairs will help in orderly conduct of the business, and therefore this particular empowering, giving greater power to the regulator for these purposes are done with an intent to protect the policyholder. Also, when in this bill we are introducing one-time registration for insurance intermediaries, this would ensure uninterrupted services being provided to the citizens. It will promote ease of doing business for service providers and reduces regulatory delays and administrative compliance burden for intermediaries. So, sir, I'm just highlighting the features which are in this bill, and immediately after that I'll take up specific request for clarification by members or questions that they have asked. I'll come to that in a minute. Sir, our country needs further capital infusion into the insurance sector. So the question then arises, what has happened after increasing it to 26% first, then to 49%, and then to 74%? Haven't they given you the expected result? Yes, they have given. And they are also giving that story which is opening up that there is need for more. And therefore, we have to increase the cap. The proposal in this particular amendment of removing the upper cap on FDI in the insurance sector will be a seriously big enabler in ensuring Sabka Bima, Sabki Raksha. I'll just give you the number of insurance companies which are each under different levels of FDI which they have brought in. So less than 26% FDI are with 10 companies who are operating in India. 26% to 49%, there are 23 companies, insurance companies. Between 49 and 74%, there are 3 insurance companies, and 74% is with 4 companies. So there is scope for more, and this will enable global insurance by this amendment that we are seeking to bring. Global insurers will now see that the market is further opening up and they will be able to bring in substantial capital directly and attract more insurance companies into India. So the problem has also been not just opening up or raising the cap. Many companies do not find partners in India who are willing to, join with them and do because of various reasons. So even though there are interest shown, money to come in, technology to come in, better products to be brought into the country, sometimes those don't come because there are not enough joint venture partners which they can search and get into action. So now with this, they will be able to come, abide by Indian laws and set up their own business even if they are unable to get a partner. So what does this do to the policyholder or to customers who want to, consumers who want to go into the insurance market or who want to have them covered, who want their businesses covered? What it does is, sir, greater competition. Naturally, the premiums will have to come down. The classic example we also see, not comparing apples with apples, but solar energy, sir, at one point in time in India used to be per unit 14 rupees 50 paise, 14 rupees 75 paise. Today it's come down to 2. Greater the competition, better the benefit for the policyholder or a new person who wants to take an insurance. The rate of the premiums come down when there is good competition in the market. So these are reasons why we want to have greater FDI participation. We are also standardizing the regulation making process by this very amendment that is being brought in, by introducing standard operating procedures for regulation making and the mandatory public consultation. This will be of importance for members to hear, and a mandatory public consultation on all regulations by the regulator to ensure that the process is consultative and transparent. So, as per the current provisions, intermediary licenses are directly cancelled straight away when found violative of the law. But many of them are probably not intentionally violative. Sometimes oversight reasons also happen. So by straight cancelling it, the process for them to come back becomes very difficult. So we are introducing suspension of intermediary license instead of direct cancellation. And we provide them time for compliance and allow them an opportunity to strategize and streamline their operations during the period of suspension. So this is a progressive step towards having people do their business without the fear of getting cancelled at the drop of a hat, I would say. Provisions for merger of a non-insurance company with an insurance company would promote a simplified corporate structure. Now, even if they are not too different, there are instances in India where the holding company is whose business it is only to run insurance business, also has a subsidiary who's doing only insurance business. We are now today not able to, under the existing scheme of things, they are not able to merge one with the other, the parent company and the subsidiary. So through this, we are saying strictly for those who are in the insurance, there shouldn't be a problem if the subsidiary wants to be merging itself with the holding company. This way, the companies and the scaling up prospects also go up. Sir, the legal requirement to seek prior approval of the regulator for transfer of share capital has been raised from 1% to 5%, essentially for ease of doing business. There are times when people move just 1% of the share, they have to seek prior permission. It becomes very cumbersome. So we have said, yes, you will have to come for prior permission, but only if 5% of the shares have to be transferred. So this is clearly for ease of doing business. Another measure, similar measure, is when the net owned fund requirement is reduced for foreign reinsurance branches from 5,000 crores to 1,000 crores. Thereby, smaller companies can come in and also spread more branches in the country. This would invite more of the reinsurers into the country for creating greater risk capacities. And also, there are a few questions which were asked about IFSC, level playing field with them. This is a major step towards level playing field. By allowing this net-owned fund requirement to be lesser than what it is now, you're actually creating a level playing field with the foreign reinsurance businesses which are set up in IFSC and the domestic tariff area. So you are actually treating both of them, although they play separately. Those who are there cannot play here, and those who are here cannot really operate from there, but the field is evened out. So the last few points on the highlights of this bill, sir. An entity engaged in the business of insurance will have to categorically use the name insurance in their company's name. If they are insurance, insurance. If they are assurance, assurance. Or if they are insurance in some way, reinsurance or health insurance or whatever. So the insurance company which does or which carries forward insurance business should have the word insurance in their name, company's name. So even the intermediaries will have to have the necessary change to indicate that the nature of business or service that they are providing, so that there is no ambivalence or doubt in the mind of people saying are they insurance, are they not? So that structure is being cleared. We've also very clearly said, sir, and this is very important, periodically the central government, in exceptional circumstances, by notification, apply with modifications or exempt totally the insurance intermediaries operating in special economic zones, including IFSA, from the provisions of Insurance Act. This will only be done in exceptional circumstances and for those who are in the special economic zone, not to be doing business in this country, but in those special economic zone and serve their clients elsewhere. So that is very strictly confined to that. So we are also providing, this is a very important point, sir. There have been voices saying, will LIC be diluted? Will their stature be undermined? We are providing greater autonomy to LIC so that they can open zonal offices wherever they want, because aligning compliance for its foreign offices can be done there according to that land's rule. But here, they don't need to come to the government to seek permission each time. Even a zonal office has to be opened. No, you have the right, you please go ahead. So that way, business decisions will be expedited instead of spending time seeking permission. So I've already mentioned about the disgorging of wrongful gains from insurers and intermediaries. Sir, the maximum limit of penalty on insurers for default in complying with or acting in accordance or acting in contravention of Insurance Act, the regulator has proposed that there should be an increase in the penalty amount. It is currently 1 crore, it will be increased to 10 crores. And now the insurance intermediaries also will be treated equal to the insurance company itself. Earlier there was a disparity. Intermediaries had one rate, insurance companies had different. Now both of them are being levied at the higher level, which is 10 crores, both insurance companies and the intermediaries. So this, I think, summarizes the main features of the bill that we have proposed here. Members have asked a few questions. The first speaker, Sir Shakti Singh Gohilji, had asked as to why we are rushing through this bill. We are absolutely not rushing through this bill. Even as of 26th November 2024, we have written to the states and all union territories with a clear invitation to provide comments and also suggestions. And this was a very structured, documented, intergovernmental consultation not just an afterthought. And overall consultation, even with the public, the general stakeholders, insurers, regulators, industry bodies, general public, have all been happening almost now for 2 years. In fact, in our website, we've had 13,000 inputs coming from ordinary people. People who are interested in the insurance sector have all sent their inputs. So there has not been a rush at all. This has gone through the process, and in fact, I would think we should have come in earlier. With this kind of a timeline, I would have personally preferred if we had come a bit earlier rather than now. So then, will these amendments result in an adverse effect on employment? Was a concern raised. I want to highlight the fact, sir, that opening up of the sector will only attract new insurers to come, new intermediaries to come, and also allied service providers will also come into the market, therefore widening the insurance ecosystem, creating net employment, new employment. And what are the kind of work for which employment potential will open up? Agents, brokers, intermediaries, one section. Because the market becomes larger, more products are being launched, and wider customer outreach happens. The second layer which will have benefit is the ancillary services, such as technology providers, claims managers basically, those who do analytics, customer service, and underwriting support which is provided. Jobs will have to expand in those areas. Students who are doing actuarial sciences will also have greater prospect because there's increased demand across for products. The pricing will have to be rightly arrived at. Only actuarial science students will know how to arrive at pricing. Risk modeling, product design, and compliance roles. All these are jobs which are waiting post more and more opening up. So actuarial sciences students will have greater market demand for them. And finally, when the branch offices open up for each of these companies, finance graduates or non-finance graduates who want to get into this field will have an opportunity. As it is, after that 26% increase in the year 2000, after raising it to 49% in the 2015 amendment, and again taking it to 74% in 2021, look at the numbers, sir. The number of employees, agents, and micro agents have grown by almost 3 times. In 2014-15, we had 30.14 lakh employees, agents, and micro agents. That number from 30.14 lakh, has actually gone to 88.17 lakh in 24-25. So the number of employees, agents, and micro agents number is actually multiplying, and not just marginally, substantially. Overall, therefore, sir, it will be a great job creation opportunity, skill development opportunity, and formal employment opportunity. I already addressed this issue, sir, but because I want to say a little more, saying, will the LIC's statutory recognition be diluted? Was a question raised. I can't see the member here, Ashok Mittalji, but he raised it. We are actually empowering LIC, sir, like the way I told about zonal office or any other that they want to take. These decisions don't have to come back to the government for permission. They should automatically, professionally handle it. And also, sir, I'm very happy to say this. LIC continues to enjoy the trust of our citizens and perform well to their expectation. That is why it is important to recognize that even for LIC, a good competition is only going to make them even more professional and accessible for our policyholders. LIC's own total asset under management has increased by 6.45%, and it stands at 54.52 lakh crores as of 24-25. Is this possible if we are trying to undermine them, sir? Till now, have we undermined them? Not at all. The solvency margin of LIC has improved to 2.11 from 1.98, and this within 1 year between 2023-24 and to the current 24-25. LIC also registered a growth in its net value of new businesses, which stands at 10,011 crores compared to 9,583 crores in the previous year. So I can give more data to prove that LIC's valuation and LIC's statutory strength that it has is still intact, and in fact it is flourishing. Sir, this question about, oh no, the shareholders' interest is probably not being kept in mind, only capital or only those who are promoting it and their interests are kept in mind, is not right at all, sir. Because policyholders' benefits are the ones which we are keeping in mind. When I spoke about the funds which are raised as a result of penalties which are being imposed on wrongdoers, is actually going towards protection of the policyholders. So that is not right. And more the participants in the market, the cost of the premium is going to come down, and it's going to be making the policy affordable for everybody. The policyholders' education and protection fund is actually going to build greater awareness. And the disgorgement, which is something which I told you about for unlawful gains, are all being given to the IRDA, so they will be able to take that fund out of people who have gained it wrongly. So I think I've already answered this question about which Honourable Member Kanimuri raised about, is there parity between IFSC and domestic players? Yes. First of all, market participants and companies who operate in IFSC are not allowed to operate in the domestic area. That's first one thing. So the exemptions that you may offer to the IFSC will not affect the domestic players. It is completely confined only to them. So that doubt need not be there. So then finally, I think I've answered most of these questions which have been put. I want to just highlight the facts. Repatriation of profits. I want to tell the members, the regulator has prescribed that all insurance companies will have to maintain a minimum solvency ratio of 1.5, which means the assets should be 1.5 times of the liabilities. So the companies will have to keep that. So it's not as if they are making the insurance here and taking away the profit and running away. That is the solvency ratio minimum that they have to hold. Also, the companies will have to make provisions for all. There are two categories, sir, which is very important for us to understand. The first category is incurred but not reported category. The second category is incurred but not enough reported liabilities. So that's the category. So it is important for them to keep money even for that. Somebody made a claim but actually not made the total claim, and they may come back later. Do they have the money for it? Therefore, in order to make sure that in the eventuality of a claim coming a bit later also, they would have made a provision. The regulator has made the companies provide for incurred but not reported class of claims, and incurred but not enough reported class of claims also. So every liability will either get covered in this or that, for which provisioning is compulsorily being made because of the regulator. And also the profits are, sir, calculated only after providing for these liabilities, which I said 1.5 times solvency, the second one being incurred but not reported, third one being incurred but not enough reported liabilities. So for all these, the company will have to make a provision and only then calculate its profits. So the profits are calculated only after providing for these liabilities which the regulator has imposed on them mandatorily. These norms provide enough safeguards for protecting the interest of Indian policyholders. So the other question was, only LIC does your government schemes, and therefore by diluting, we're not diluting, but by diluting this or bringing foreign companies, only they will be burdened to do these social sector related activities or government schemes. Not true, sir. Even now it's not true. And through these amendments, we are not giving them any room to get away from that responsibility. So with regard to the private sector insurance companies, they are actively participating in all the Jan Suraksha schemes of the government and also in Fasal Bima Yojana. PM Fasal Bima Yojana is being implemented by 13 private insurers and 5 public sector companies. Even now they are doing it. More than 15 private insurers are participating in Jeevan Jyoti Bima Yojana and Suraksha Bima Yojana. They are private companies already and they are doing the government schemes. Private sector insurers have cumulatively enrolled more than 20 crore persons under these 2 schemes. The government Jeevan Jyoti Bima Yojana and Suraksha Bima Yojana, private insurers have brought in 20 crore persons. So by opening it up for foreign direct investments, the mandatory requirement that they have to participate in the government schemes is not going to be relaxed. Next, sir, the capital insurance and public sector general insurance companies help them to recover from losses but not made them competitive. Absolutely wrong. The losses of the public sector general insurance companies were mainly due to increased health insurance claims during the COVID pandemic. The capital infusion actually helped them to recover from this shock. Along with capital infusion, sir, key performance indicators based on monitoring of these companies was also started by the government, and it was started around 2022. Series of measures have been taken which help them to improve even their performance. So it was not infusion to make up for their loss. It is infusion to build their business and strengthen them. So as a result of these, the performance of all these companies has started improving and their losses have come down. In fact, 2 of the 3 companies in which capital was infused have already turned profitable. That couldn't have otherwise happened. So the jobs of the public sector insurance companies, sir, I've already explained about how profit is being now made by them and the jobs are being intact. There's no accretion at all. And arbitrarily will they fix up premiums which are going to be too high. So already the regulator is fixing a cap on the premiums beyond which they cannot. So the cap is already being levied by the or stated by the regulator already. So it's not as if when we opened up from 49 to 74, they were given the right to fix any premium. As it is being very closely monitored by the regulator and a cap is fixed in the interest of the policyholders. So that will continue, sir. So there need not be that doubt if by making it 100% FDI opened up for insurance, these are things which can happen without us noticing. The structure is in place, regulation is very clearly laid out. The Indian premium which is being collected will be kept in this country. So with all this, sir, I request that the House consider this bill and kindly pass it.
Thank you. There's no message from Lok Sabha. Message Secretary General.
Sir, with your kind permission, I rise to report that the Lok Sabha at its sitting held on the 17th December 2025 pass the Sustainable Harnessing and Advancement of Nuclear Energy for Transforming India Bill 2025. I lay a copy of the said bill on the table.
I shall first put the amendment moved by Dr.